Here we go. Hey everybody, Economic Ninja here. I hope you're doing great. I've got a special guest on, and if you can't figure it out from here, we're gonna just do this. Cue the fire. Oh, two flames at once. Guys, if you don't have enough doom and gloom in your life, I'm gonna bring on our next guest, Johnny Bravo. Johnny, are you there?
How that worked? Did that work for you? Oh, now I have, oh dude, I have, this meeting is being recorded. Okay, got it. I can click that button. So I'm giving you the authority. I'm just getting off my elevator.
I don't even know what to say right now. I'm like, when you said that, I'm like, oh crap, did I forget the number, the recording? Johnny, thank you so much for coming on. I want to have you on because we're going to talk about the DXY, what's going on with dollar strength, as opposed to a bunch of things, gold, silver, copper, all kinds of stuff. I want to thank you for that. But I also want to thank you for reaching out a while back. And since we've met each other in person, had a lot of fun, some great conversations. This has been truly an awesome experience getting to know you. And I really wanted to say that first off.
Well, the truth is, you do know that this video will probably be demonetized, right? Because of the things that I am going to say, right? And the things that because I'm going to lead you on all these things, and you're getting no money for this video. So everyone, make sure you give him money.
You know, guys, I just want to say right now, it's not like a competition thing, but when Johnny comes onto somebody else's channel, he wants to pop out and go, hey, guess what? I'm going to get you demonetized. So this is what I'm going to do. I'm going to start waving my hands and go, hey, everybody, what's going on? We'll see, you know, who wins at the end of this. So where do you want to start?
Well, first, I just want to say I won't talk about the World Economic Forum at all. So I'm leaving that one out, and Bill Gates. But okay, so side note, I just want you guys to know. So I know Economic Ninja personally. Like, he came out, we hung out, he broke my boat. It was only about $11,000.
I did not break his boat. He was driving the whole time.
So anyways, he broke my boat, which you should never buy a boat, ever buy a boat. But anyways, I just want to say he is the most authentic, real man that I've ever met. So you can trust everything that he has to say. Pinky stinky promise. Okay, anything you want to say to that?
I so do not believe you right now.
Okay.
No, thank you so much. All joking aside, really do enjoy this relationship, and I thank you again. So let's dive right into this, Johnny. You've been talking about for a little bit with your charting expertise that we're going to see some weakness in commodities, and there's a reason why that's a strength in the dollar. So can you elaborate on that?
Yeah, I mean, I wish it wasn't this way. I'm going to share my screen. Let me know if this is coming across on your side.
Yep.
And then, am I in the corner? They can probably.
Yeah, you're in the corner. I'm going to move you out of the way. I'll get you. Okay. Where do you want to be?
Probably bottom right, if you can. Man,
right.
You are an expert at this. I can't. I'm like in a brown paper bag.
You should see me spell in my grammar. Trust me, I'm an expert in some things, not most.
It's funny. Everyone like bags on me on my channel because I have the worst. They're like, thank God you weren't an English teacher. Okay, so for those of you that don't know me, university professor, high school business teacher. I quit. Actually, yeah, I quit. I was going to get fired. I'm like, no, it's good. I'll go. It's all right. I quit. Yep. But all right. So what you guys are seeing here is silver. So we can just go through this. And I just want to let you guys know from the start, I love gold. Yep. I love gold, God's money. Silver, yep. It's amazing. It's real. Wait, actually, I have two pieces. It's real. You see, yeah. I can actually hold it. It's not a derivative. It's not a contract. It's not fugazi. It's not fugazi. Yeah. It's actually legit. But then we struggle with, at what point do we have to move from the fugazi to the real stuff? So maybe we'll kind of go into the weeds on that in this video. But when it comes to the digits, and because everyone always, and I text you this because this is what people want. Digits go up, or numbers go up. That's what everyone wants. I want my numbers to go up. Yep. So, which I'm like, okay, well, you're not going to like me because we're going to talk about the dollar. And I've had like dollar milkshake theory. Like he's been on my channel quite a few times. I'm into the macro. I want to know, why is the dollar going up? Yep. And if you're just like, I don't know why, and trying to come up with some reasons of why the dollar is going up, that's probably not good. You need to get some knowledge on that. So let's go over a couple of things. On my chart, you see the 30-year yield there's a third. Oh, hey, the little yellow thing, that's where the Fed decided to not give us any money anymore. So that would be the bond market. So then you have the 10-year. This is the yield. So the entire world is a debt-based. Maynard Keynes create money out of nothing, out of thin air, out of debt. It doesn't even exist. You go into a bank, you say, I want a loan, poof, money. Like they don't even have it. No, it's debt with interest. It's evil. Yep. That's evil. Real money is not evil. But looking at this chart, so here is the yield on the 10-year, head and shoulders. That's probably going to play out to the downside.
Wait,
so
Johnny, real quick. Do you think that's still going to play out if the Fed keeps raising their benchmark rate?
Well, okay, I'll get to that.
Okay, cool.
Yes, yeah.
All right.
But you see, no matter what people say, so you have the narratives and you have like what's on the news, but the charts don't lie. And I clear out when I trade when I go into this, I clear my brain of all the noise and I look at the chart and I say that's an 80% chance that the 10-year yield is going to come down. Okay. I'm just giving you percentages.
All right.
Charts are they're probabilities based on fear, greed, history, and math.
Human emotions. Absolutely.
It's all there. And we just keep repeating. So when I put something up there, I know it's repeated. So I'm going to trade it and I'm going to make money off of it. The 2-year yield. Now you were talking about the Fed. Yes. So the Fed, I don't believe everyone wants to make them God. I don't, but you know, if people want to say Jerome is God and the Fed is God and all of that, that's great. So here is the 2-year yield. I believe that the Fed follows this. They follow the bond market. That's all they do. And I'll prove it by turning on a little indicator. Let me see. Fed. Oh, that would be the Fed funds. See the orange line? You can see that. All right. So the orange line is the Fed funds rate. Let me move this over. And as you can see, when the bond market starts to move, you see bond goes up, yields go down, yields go. It's a opposite correlation. So then the Fed comes in, and right now everyone's like, oh, what's the Fed going to do? Well, I'll tell you what they're going to do. If you come here, let me make this, if I can make this a little bit bigger, pull this up. See the orange line right there? That's the Fed funds rate. They're behind the curve. That means their overnight lending is way behind. Their rate is way behind what they allow banks to trade with. They got to get all the way up there, like they did here, like they did back in 2007 and 8, actually right on the dot. And then
but if you notice in 05, they were behind the curve as well when they started the rates.
Yes. So they're behind, but again, who's in charge? The bond market is in charge. 100%. The Fed likes to pretend like, okay, we're in charge here, but they're actually not in charge. But if you want to believe it, that's fine. This chart is telling me they have a whole long way to go. Let me move this a little bit. Let me pull this over. So they have to move their funds rate up. How far do they get until this comes down? Well, we're going to have to wait and see. So this right here is your bond market. And this is the Fed trying to chase the 2-year yield. It predicts it. It tells you where it's going to go. And they do their best to make it right to the top. But I think that was about it. As a chartist, you barely got a little throw over from 2018, October. This is called a throw over, unless, we're wrong. And it continues to rise. I think, as you can see, the entire economy is collapsed. The housing market's collapsed. The stock market's collapsed. I mean, if I overlay charts, you're going to see everything going this way the minute you see that little orange line that I had up there. Now, do you have any questions, or can we move on to the good old dollar?
The first thing I think of when we're talking about the Fed trying to stay ahead of the bond market is the 10-year and how it comes into play in the mortgage industry. And that's what I know a lot of people care about. So there it is right there. So they've got a long way to go, but you're thinking that if I hear you right, because the head and shoulders that we're making right now in the 10-year, that 10-year is going to end up coming down before the Fed even gets that high.
You are 100% correct.
Okay.
So this is actually on a monthly, on a daily. There's your, now again, this is not confirmation. So please, everyone, everyone out there, like, oh, you said it was ahead. No, we still have on the daily, and I've had this up for, I don't know, maybe 2 months, maybe a month or so. I said, if this plays out, I believe that it's going to head higher. The yield on the 10-year will probably head higher a little bit more, come down to here. And then how you do this, play this measured move is from here to there, and yields are going to hit support. If you go back here, you see that's support right there.
Yep.
It's going to land at support at 2%.
Okay, now I also want to make everybody aware of this. Even though mortgages track the 10-year, because historically banks like that because they know that people either move or they refinance within 10 years. That's why they like to do that. They still price their own loans. And so they price risk. And usually when mortgages or home real estate's falling, they don't tend to lower mortgage rates into a falling market. What I've seen, at least from my experience in 2006, because they go, why would we want to loan on something we're not getting, is the juice worth the squeeze, essentially. So I want people to understand that. Just if Johnny's saying, if he's right, the 10-year falling, it doesn't necessarily mean that mortgage rates are going to drop in accordance. Would you agree with that, Johnny?
For the most part,
yeah.
You're 100% right. 10-year yield, 100% right. The banks are in charge of everything. Here's what you need to understand: it's a supply and demand. If there is no one out there that is going out there, they're not refinancing. They're actually not buying right now out here in the Austin area, which I highly recommend no one move to. Sorry.
Oh, you moved there, and also
I know, but I'm building. But I'm building out in heaven. So
yeah, you are.
Like, this is where I had to reside, and it's 100 and Google says it's 107, but it feels like 127.
Oh.
But anyways, sorry, I just chased a squirrel. People are not going into the banks and saying, I want a loan. So what's going to have to happen? Supply and demand. So yeah, everyone's like, oh, banks rates are going up, blah, blah, blah. Well, they're not, because no one's taking out loans. I mean, that's where banks make their money. They make their money in mortgage-backed securities, loans in the bond market. No one is coming into said bank and saying, I want a loan. So what has to happen? Supply and demand. It's the rates have to come down. So if that kind of makes sense to you on. It does. Okay. All right. So now do you want to move?
Let's go into dollar and these other asset classes like gold or wherever you want to go with.
Okay. All right. So we got the DXY. Everyone talks the DXY. Now, if you want to trade it, that would be UUP. And this is what I've been telling everyone. That was my one mistake, I think, in the last 6 months. Instead of going, because I went cash, and I should have went UUP, because that's the tradable symbol. If you were to look at this, let me pull back to the monthly so you can kind of see. And then it's like,
wow,
wait, Spider-Man just took over. All right. So on this, let me get rid of Fed funds rate here. This is called right here. This is a wedge, that you would shove in a door.
Yep.
Actually, let me, this might even look better if I just go area. All right. So this is a falling wedge. Falling wedges break to the upside, maybe about 78% of the time. Again, it's just probabilities based on math and what you and your fear and greed end up doing. There was a wedge here. There was another wedge here. It broke up. Everyone. So if you understand, let me zoom in. This is, you want to see a big dollar. This measured move on the dollar, if you were to measure this from here to here, that is about where you make your measurement. That's not a 108 dollar. That's a 177 on the DXY.
But now, again, I want people to understand that's because it's measured versus other crappy currencies. So the last time we saw 127 on the DXY was around 2001, 2002, because the euro was sort of a basket case at that point.
Yeah, it's basically, I call it the less whole wife beater in the closet. Yeah, this thing stinks. It's dirty. The dollar is ugly, but everyone, and what people don't understand is the entire world goes into a bank and says, I want a loan. They say, sure, would you like it in your currency, or do you want the dirty dollar that's at 2%? Yep. Everyone says, I want the dollar at 2%. Yep. Great. So now you have so much dollar denominated loans out there, and those are coming due, and they're like, and then the strength of the dollar, and it's wiping out the world. I think it will, but it's going to
Johnny,
take time.
you don't know this. I haven't done a video yet, but it sounds like Saudi Arabia just signed on with the BRICS nations. And all that world, you know, like you're saying, everybody goes in and gets an option between their currency or the dollar. That really came about in 71 when Saudi Arabia inked that deal with us. But it sounds like it's falling apart right now. So we don't know how long this is going to last.
Well, I'm just, who knows? Yeah. But I'm saying the entire world has been taking out all of this dirty shirt debt, and they have to pay it back. So either pay it back or default. And I don't want to go down the road of default. It's not good either. Everything points to a strong, dirty dollar until it ends, until there's a reset. And I think the people that are in charge of the system understand that, or if they don't, I understand that, because also being a chartist. But yeah, looking at this, this just broke on the monthly and met the price target. If I were to zoom in on this, this was another falling wedge that took off. And again, if you guys, not financial advice, but if you want to actually right click and trade it, it's UUP. You cannot do DXY. So, and everyone was saying I'm a stupid idiot and I don't know what I'm talking about. Charts don't mean anything. Look at this. Look at this move from right here to right here. Today is your price target. Today is where you start taking profit. Well, and then if you really want to know, sorry, you can always cut me off.
No, keep going. It's going to be a long interview, so I don't know who's going to stick with us, but this is good info.
I have an indicator. It's called Lux Algo that I use that helps me on when to take profit. And so it'll come on, and well, actually there's a lot of things that I can turn on. But do you see that area right here? And this is
that's your profit taking.
Yep. So I know, and then here's the stupid thing. If you sell in the dollar, where do you move to? Right. It's like, in the dollar, like you're basically going to, but yes, this was your profit taking zone. So that's where I teach everyone to get in, to get out. And then because I'm going long. My apologies.
No, it's okay, because you know why? Let's move into precious metals, because that's what everybody's thinking. Like, how much farther can it go down? Because as the dollar gets stronger, the paper contracts sell off, right? Because algos are out there trading for large institutional funds. And even retail investors like yourself are doing this, right? So what are we looking at? Because there's a big difference between physical, like you said, precious metals, because that's a whole nother market. But the paper sell off, what do we expect there?
Well, if you look at, here's gold, GLD. And again, people are like, no, this is paper. This is fake. This is, but it still affects it's manipulated. No, I know. I get it. Yeah. I just don't want people like throwing rocks when I'm like, I'm on your side. Yeah. People that Bitcoin, I'm on your side. Dollar, I'm on your side. I'm just telling you what's going to happen. Whether you like, people like plug their ears, la, la, la. I don't want to hear anything. There was a time, this was months ago, this was actually June, July, August. I was jumping up and down telling everyone, which I just taught you right now. See this zone? You're taking profit on gold. Yep. This is when everyone's like, no, shut up. You don't know that, it's going to go down. And then I drew another line right there. This is a support resistance. I said, if you break that, which when you broke it, we headed lower. And here we go. So we're going to head all the way down until we hit next support, which is down here. See that red line? Yep. There's your next support. I hate to say it, but that's just, there's times to enter. There's times to exit. There's also, if you just want to accumulate, go ahead. I don't, but definitely don't dollar cost average into something that's not real. A lot of people dollar cost average into altcoins. They dollar cost. I mean, it better be something that's going to stick, like dollar cost average into land, into real estate, into maybe a major indice like S&P 500, SPY or DIA or gold, silver, something that's
like physical gold or silver.
Dollar cost all day long. That's fine.
Because what I'm curious about, the last two times gold broke down, when we had a stronger dollar, we saw people starting after a little bit of time that the actual coins, or sorry, the actual paper, silver and gold paper was selling off. People started diving into precious metals, and then the premiums rose. So that's the problem, is because it's a whole different market. It's where do we go now? So let me ask you this, because you and I offline have been talking about physical metal. But that's the question. You even asked me the other day, like, where are we at with the premiums? And the problem is I've never seen a time in like the last year and a half where premiums have been so high for such a sustained period of time. Now they have come off their highs, but they're still high. The question I have for you is, did you ever own a physical metal like years ago, like let's say a decade ago?
Yes.
You did.
Forever.
Okay. So you know what it's like to buy when premiums are super cheap.
Yeah. Oh yeah.
Gotcha.
Yeah. I've been, I mean, even for my kids' weddings, I gave them gold.
Awesome.
I try to teach my kids, like, I said, do you want gold or do you want Bitcoin? Or do you want, and they're like, you know, one kid chose Bitcoin, one chose gold. So I've always, and I taught this in school.
Yeah.
So in high school, I'd line up money, and I would put a dollar bill there. I'd put a gold coin, a silver coin, and I'm like $100 bill. And I'm like, which one do you want?
Yeah.
Every single one of the kids grabbed the $100.
Wow.
No one, because it's not taught. There's a reason why it's not taught.
Exactly.
The masses cannot understand what is real.
Yeah.
So they take something that is fake, debt, they create a monetary system in debt, and then they teach people that a sheet of paper that says Federal Reserve note is actually money.
Yeah. That's actually a really good point, man. And I thank you again for coming on, because I don't want to go too long-winded, but I appreciate you sharing the charts, because I'm telling people all the time, and it's like every time they start to understand the importance of gold and silver as real money as opposed to fiat currency, and it seems like they dive right in all at once. They buy up everything like with their retirement account, and then it doesn't do what they want with the numbers, and they start freaking out. And I'm like, that's why I'm like, it's very important not to dive in and to just layer in. Wouldn't you agree?
I'd say it's a great if you don't understand charts, gold, silver, it's an insurance policy.
Yep.
And that's an easy one for like 1%. But truth is, I mean, when this thing goes, but again, they already have it all, you know, in the bag.
Yep.
They know how to, what levers to pull. And again, it's going to be something that you think, I mean, the sheep are going to love it.
Yeah.
Because they're like, oh my gosh, this is amazing. A digital dollar. I just can't wait.
Oh.
But yeah, I would say learn the charts before you really go all in.
Yeah.
Because you need to know, why did you get in, and why are you going to get out?
I completely agree. And you teach courses on this, don't you?
I do. But I'm not selling.
What? Okay, guys, I'll tell you what, as we close this out, if you want to see Johnny sell a class, Johnny, where can they find you on YouTube?
Nope, you cannot find me on YouTube. I do not exist, but if I
wanted to give you a plug because I've heard nothing but good about it. So to be honest,
well, link in the description. I'm sure my channel will be there, but
there you go.
The course is closed. You cannot get it. That is it. Too bad. You missed it.
I got to mess with you, man. Thank you so much for coming on. I really appreciate it.
Yeah, absolutely. You're a good friend. Thank you.
Seriously, if you would ask me a year ago if I could ever hear Johnny Bravo say that, I would say you're nuts. So they're not nuts. All right, guys. Thank you so much, Johnny, for coming on. Guys, have a great day. With that being said, the Economic Ninja is out.